Good evening, ladies and gentlemen. I have been having some existential crises lately over the future of AI, robotics. When you see the age of abundance that we are going to be heading toward, there is going to be so much job obsolescence, whether it's from the entertainment industry to what I'm doing to we're going to get into a lot of this today. And it really makes you question the future of like capitalism and how everything is supposed to exist in a world where you don't need to work. Everything is just going to be automated away thanks to, again, these robotics and AI technologies. I've been having some real like crazy like philosophical debates with religious people about this and what it means for like the human experience, considering how much capitalism has been the way of the world for the longest time. Right now, this is obviously toward the end of my lifetime. Like, we're going to see this unfold to some varying degree, which leads to question, as an investor looking at these stocks that are taking advantage of a lot of this today, are we actually seeing a bubble like we did in 2020, during like the crypto boom and like a lot of small caps and the devastation that followed? And we're going to run through a ton of stocks today. And I just want to talk about this from a broad perspective. And then at the end of this, we can come to some varying conclusion on where in the line do we sit between valuation metrics and what's coming into the future, because we don't really know, but we can understand what's happening today and kind of get a value base for it spread across all these companies that we're going to be getting into. But I want to point out this existential crisis that I have comes from smaller businesses that are disrupting today, right? Everyone thinks, oh yeah, when self-driving's around, we're going to have to worry about truck drivers, but it's not really happening yet, right? Well, there's a lot of industries being largely disrupted that are going to cost millions of jobs. I mean, we're talking about everything from accounting to editing tools like this, where you can upload a podcast, it'll fully edit it down and even break it down into 10 short form clips and rank them by what one's going to go most viral. I'm not promoting these. I should be. If you're into marketing, I highly suggest signing up with some of the affiliate programs behind some of these softwares, because they have some great affiliate plans, and I recommend trying them because they do let you try them for free, though you do have to wait usually for a little while to get the content, because I think the free version, like they get so bogged down by demand like ChatGPT that sometimes it lags and you got to wait a day to even get it. But still, it is way cheaper than obviously hiring somebody to do this when you can get $9 a month to get like a certain amount done. Here is just crazy to me. But that's not even the start, right? I mean, you also have the businesses like this. Synthesia is a really neat one, because now you can basically just hire a very cheap, kind of synthetic person that speaks multiple different languages, right? Listen to this.
Hey, I'm Rosie, one of Synthesia's stock AI avatars.
Hey, I'm Emery, one of Synthesia's stock AI avatars.
Hey, I'm Helia, one of Synthesia's stock AI avatars.
Super interesting. I mean,
I'm looking forward to helping you create videos.
Yeah, like I should be able to tell her to quiet up there, like Siri. Anyway, this is.
I'm Frank, born and raised in the Netherlands, as you may hear from my accent. Within Heineken, digitalization is very important. My role in the company is that I'm responsible for continuous improvement program. Before we started using Synthesia, we used a lot of PowerPoints. And to be honest, I hate PowerPoints. I call them poison points. I heard about Synthesia from my colleague. I'm not an early adopter of new technology, but this one looked very promising. I learned myself.
Now, this stuff isn't like generational changing yet. Like, there's some issues with it still, but I'm seeing this spreading out through my entire industry as somebody that works heavily with smaller businesses to mid-sized businesses, right? Like, I'm seeing the adoption happening, and it's coming, and this is going to be highly job replacing. But what I think also is incredibly intriguing is the scale of data that needs, to be refined, essentially, when it really comes down to the mathematical equations at scale to make this stuff work. Sam Altman came out, and I'm sure many people have seen this video, but we'll watch the first little bit because I kind of get highlights some of the articles and breaks it down.
Let's just say that everything about this is just mind-boggling and huge in terms of ambition, scale, investment. This is like the moonshot of all moonshots, and here I'm going to use Google's definition: something that sounds undoable, but if done, could redefine humanity. That is what Sam Altman is apparently working on here, which also means that this should all be taken with some amount of skepticism. A lot would have to fall into place. So let's just start with the number. According to the journal, this could require up to $7 trillion. That is 7 times the expected size of chip sales in 2030, more than 5 years away. It's more than the combined market caps of Apple and Microsoft. It is 7 million millions, and here it is written out: 12 zeros if you are counting. We had to make it big. Now, the project itself is aimed at reshaping the world's chip building capacity. No small feat. Altman is going after one of the most complex, expensive, and geopolitically sensitive industries in the world. And it is a project that would create an equally complex partnership between OpenAI, chip makers, investors, power providers, and governments. Now, the most interesting is perhaps the why. OpenAI and Altman, they're on a quest to develop AGI, or artificial general intelligence, which OpenAI defines as systems that are broadly smarter than humans.
So I just want to kind of pause it here. You kind of get the gist. They want to build a supercomputer. I think Sam Altman has sat down and is somebody that probably understands these large language models, can kind of do the math on what it would take to get a model that would be like, you know, where they would want it to be to really start solving some major issues at scales that are just unimaginable, right? So they're like, well, it might probably cost around $7 trillion today. If we can convince some people, who knows, maybe we can pull it off, right? But the thing is like, you know, this this isn't exactly happening tomorrow, but I think it really puts things into perspective when you see kind of this guy's thinking at a level that like today is child's play. And you know, we're a little ways out from this happening, but it shows you the demand for these chips, right? Like there's a recognition for the chips that are driving these kind of sales. So you take a look at something like Nvidia, right? And Nvidia is going to be the general case study behind, you know, what is going on here at scale, because this isn't like these softwares you're seeing like Synthesia. Those companies are making chump change moves here. I mean, they're not the majority impact to what's happening to Nvidia. I mean, it is Microsoft and Meta and Amazon and these companies that recognize they can build these tools that they're seeing from these other companies at a much huger scale. I mean, when it comes to self-driving and robotics and all these other things, they don't want to mess around with like a little bit of editing software. They want control at a level, you know, where they can take like all this YouTube data and everything that the internet is using and start compiling it in these incredibly intellectual, you know, models that might as well be like Jarvis from, you know, Marvel movies here when it comes to Iron Man. But I mean, let's take a look at this. So Nvidia, you know, it's just going bananas. I mean, this is insane, right? Like everyone's talking to, this is the new cryptocurrency. This is the new everything. I mean, a 5-year return of 1,733%. Like Bitcoin ain't got nothing on this. I mean, this thing is, you know, it's making unimaginable moves at scale, unlike anything we've seen in quite some time. Let's be real with ourselves. And a lot of this is caused by what is happening here. You know, when it comes to these big business purchases of these chips, I mean, it is driving revenue at levels that are unimaginable. I mean, this is the new oil. When you can charge $40,000 for a chip and Nvidia is making a 70% margin on it, call me Pablo Escobar, but people and governments are going to want to come for that lunch. I'm just saying, there's no company on the S&P top 10 that looks like this or has books like this, and it can very likely become the largest company in the world if this continues. A lot of skepticism behind this, and we're going to talk about it and break it down, as Nvidia today is trading at over, I think, 100 times multiple, which again, you try and run the math around 100 times multiple, which means it has to double. It's got to double up quite a little bit here to even start justifying the value if you're buying it, which means in my current understanding, you know, Nvidia could get to Apple's market cap size is where it's going to have to pretty much get to justify the current multiple you're paying for it. Because I mean, they're making about 10 trillion a quarter. You know, Apple and Christmas does like 10 billion. I think Apple's doing like 30 billion for Christmas, but usually I think they're doing between like 20 and 23 or something. So I mean, you know, they really got to get to scale here. But then you look at something like TSM, right? The second largest chip manufacturing company now next to Nvidia, and this one's starting to have a bit of a comeback. But is it just? Because this company is more broadly serviced. This isn't a company that's, you know, driving high value products to big business. That's something that Nvidia has definitely become the king of crown of all businesses for, because TSM, like, their revenue has just generally been declining over the entirety of last year. And you take into consideration even January of this year, and I don't think we have full earnings. I have to double check for this company, but they did 215,000, which was up 7.9% year over year. So we're not seeing that revenue growth with the second largest chip manufacturer. But then you look at something like Broadcom, right? Like some of these other companies that are playing in here, and, you know, they kind of all start to follow suit, where even if they do have revenue growth, it isn't to the extent of Nvidia, right? Like these are the other major chip producers, and yeah, you know, Broadcom, some of these companies are growing, but they're just not growing like Nvidia. So it shows you the separation in the chip market and this AI story when, you know, Sam Altman and these guys are like, oh, you know, we're going to make artificial general intelligence. Well, it's kind of like AI has been around forever. I mean, just using a phone and a calculator, I mean, is just taking advantage of just, smart programming. You could call that AI as well. It's like it's doing the math for you. I mean, it's smarter than human is and quicker. So it's kind of got to question it, right? Like, AI is just becoming a bleed nose term, right? I think it's just over exaggerated these days. But you look at a company that I actually love, and I think of all the chip companies that exist out there that I think can benefit the most no matter what happens, it's going to be ASML. This company is one of the most marvelous technological companies on the planet. I mean, they're more advanced than what they're using on the moon. The revenue growth is highly consistent. They remain in the double-digit growth rates up in the 20s. Like, this is what I would expect from a crazy growing company, right? Like 20, 30% general revenue growth consistently. And this company can take advantage of it because they're selling the machines that are making these chips to the machine or the chip makers, right? Like your NVIDIAs of the world. And I don't know if you've ever had the time to look into how these chips are physically made. This is where AI generally starts, at the very fundamental base of basically shooting. What you can see here is a little, this is like, I think it's just a little bit of tin, and they launch it with a laser that flattens it out. And then they launch it with another laser that implodes it into plasma light. And then they narrow that down to like the 1,000th width of your hair on your head. And then they start etching it into the silicon chips. And if you go back and you look at like NASA and the old days of like putting man on the moon when they were using chips, the chips for then, and you look at the size of the transistors, I mean, they were the size of like a ring. They were huge, the transistors that were on those chips. And let's not even talk about, the megabits per second of data you're really transmitting off that. Now it's gotten so crazy that you've got over 1 billion transistors just in your phone, right? I mean, that's what this machine is generally putting together that's driving a hell of a lot of this these days. So on the other spectrum, let's talk software, right? So that's kind of like the miners. I mean, you got the miners going on. They're the ones that are really providing a lot of this. And, their day can only last for as long as these companies, especially with NVIDIA, are willing to spend and build out these massive cloud centers and these large language tools, right? And what the extent of that is, I don't know what Google's contracts are. I don't know what Amazon or Meta spent like what? I mean, billions. They're just chucking money into the fire for this stuff. So it's just a matter of, they probably made a budget over how long and how much is it going to be. And whenever that bucket starts to run out is when NVIDIA's days are probably numbered. That could be a half a year from now. That could be a year from now. That could be 5 years from now. I don't know. But it's not me or you driving that. It's big business, right? And there's only a handful of those companies that I think are contributing factors. So you look at something like Palantir, for example, right? Now, Palantir on the software front, this is another one of those companies that, I think falls in the same bucket as something like Constellation Software here in Canada. Constellation's like a diversified software company, but they're obviously acquiring basically software companies that have government contracts. Like Palantir is not the only one playing around in this field. They're just probably the largest. And, their growth rate, I think for the last quarter, we'll take a look because this doesn't represent that. They're doing fine. I mean, they got a bit of growth going behind them. Software-oriented company. I've talked about this before. I'm a little bit more bearish at these higher levels the company trades at because the company does spend a lot of money not actualizing too much of this. But the thing that makes it most intriguing, right, is the fact that this is also a big business-focused software company. Like their fastest growing industry is corporate, it's government based, and that's kind of like, again, something that's really turned away from end-to-end consumer use. So they're just playing in this business realm, which works for them, right? So I think Palantir is definitely one of the interesting companies. I just think it's a little rich at these current valuations, and we need to see how they grow into the future. They do make most of their money from interest income, which is interesting right now, or at least I think 30% of it as it stands in this moment. So it's been going down a bit. And they've been paying down some debt by the looks of it, as their cash and cash equivalents have dropped pretty dramatically by the end of 2023. But we can also see the accounts payable are coming down and, some accrued liabilities going up. But it'll be neat to see what this company actualizes. I know a lot of people love Palantir, but it definitely is trading at a favorably high value. Considering, again, they spend most of their money today. And I'm curious, they could just flick a switch and they'd probably 10x their stock if they just took down sales and marketing and a bit of research and development costs, because they are pretty high. 404 million and 774, like this company spending 744 million on marketing, just is astounding, right? So that's what we're seeing from the software front. I think it's a good exemplifier of AI and software. We're talking about, double-digit revenue growth, but nothing beyond anything crazy. I mean, their revenue growth days are slowing down. So it's just something to keep in mind, right, when you're paying these higher values, like Tesla. Now, Tesla, I think, is probably one of the prime examples of this because this company is very, very expensive. And I mean, this is one of my speculations for sure, but I mean, you have to take into consideration the future that people have put on this podium, especially for a company like Tesla, right? Now, Tesla, if we're only talking about revenue here, it's pretty impressive that considering the cost cutting they've done, primarily being an auto business today from a revenue standpoint, has continued to grow at double-digit paces, right? Like 18%, very hard considering this isn't a software company like Palantir, but it's still growing revenue at those kind of clips in a tough market environment. So the thing that Tesla has in the AI realm of things is outside of like the big software that Palantir plays with in a broad base of industries, Tesla's kind of focused on just one or two things. They're not really focused on the broad spectrum of things. They're not like Constellation. They're not diversifying software platforms. They're really just focused on solving big market problems, self-driving and robotics. I think these are the two major forefronts of this company that are going to unfold for the value that you're paying for it today. But the question is how long does this take? Because this doesn't exist today and none of this makes revenue. Could it be worth trillions of dollars? Potentially, but we don't know because it's not really happening right now. We have no just scale, right? So it's all just speculation in revenue expectation. The company hasn't been seeing bottom line grow, but that's the question, right? Whereas in the robotics industry today, you got companies like Symbotic that are exploding right now. And this is in the whole other spectrum, more similar to Tesla, right? Like this company's trying to solve robotics problems that are solvable, profitable today. And where is that? Warehousing. So warehousing, you've seen it with Amazon. It's probably the easiest place possible to start solving, problems that just are way easier for AI and these large language models by leaps and bounds. It's a lot less complex, right? So this company, I think it only recently IPO'd there and it's up 370%, doing pretty good since IPO date. Revenue growth explosive. It's still growing at over a 50% clip, though this is petering off as it gets into the billions. It's still growing at an absolutely absurd clip. And it's just, it's something to take a look at. It's just interesting. But again, not profitable. The company's trading at a very high value, but we're really only paying attention to revenue right now, okay? Profitability is a different story for another day with these kind of companies because, again, Palantir could easily just stop spending so much, apparently, and just add it to the bottom line. Same with a lot of these companies. I think NVIDIA is the only true bread and butter company that can justify an absurd value because it's actualizing a lot of that revenue. So you look at something like Google, right? So Google, I believe these are, again, some of the end users, the beneficiaries. These companies set up, these companies are getting all the love on a global scale because they're not crashing like China. They're not dealing with geopolitical conflicts. They do have some government, court stuff they're dealing with that has shed a lot of light into partnerships in a monopolistic manner with companies like Apple. But still, nonetheless, Google is starting to implement Bard, Gemini. You're getting all these AI platforms that, again, can be comparable to Jarvis. And I think, again, Google's got this backing, same thing like Meta does of ad revenue, right? They're the biggest player in ad revenue. They're crushing it. They continue to see revenue growth, not in the pace they used to, but this company is also working on self-driving and big problems, right? So very interesting that pretty much every major top 10 S&P company is playing in this field to a major way. Meta is probably the most underappreciated, but considering I think they've been purchasing some of the most, like they have some of the highest purchase orders from NVIDIA as it stands today. And Meta, again, I don't know if it justifies a 30 PE here. They only just started topping revenue growth. And they're only topping revenue growth primarily because they've been doubling up ads. They've been just squeezing like everybody is right now, every dollar they can. That's just what they're doing. It's not like the world that we came out of here where you're getting consistent 20 to 50% revenue growth and it just never ends. We've been pretty much flat for the last, since pretty much the midst of 2021, right? Like the market hasn't really gone that far. So, when you look at a year over year when the company wasn't growing, it's easy to have a banger 20% growth, but can they continue and sustain that with the business they have? Because right now, AI is not really playing a part into a lot of these future prospects. And Microsoft's probably another one of these mega cap companies that has the actual, probably the thing that ignited it when it came to obviously ChatGPT and all this stuff going on with OpenAI. So they're kind of the forefront of the mega caps. But again, I don't see the same stuff outside of cloud. Some other businesses, they're growing, obviously. They're probably one of the most fascinating growers, but we're only talking again, about double digits, but in the mid-teens, pretty much coming even into the holidays. Nothing that was like stupid absurd for Microsoft compared again to where it was when we're talking about these crazy growth days. And then finally, Apple, the only company that people probably don't think is doing anything with AI because it's largely just being talked about with VR, but they have some stuff going on. They've been messing around with the same editing stuff that Adobe is. Like they're starting to use like text to edit stuff, edit photos. Like they're going to shift into iPhones that are likely going to be more AI, like, better than Siri based and all this other stuff, but they're not growing either, right? Like Apple is not growing revenue. They're growing bottom line. And all these companies, I think their growth rates when it comes to earnings per share in the mega cap companies is that they've been buying back shares, right? In a world where you can't grow that fast in revenue, you just buy back shares. you cut some costs, right? Because that way the bottom line still grows in a market where revenue isn't going anywhere. And, Amazon is probably one of the few exceptions here that is just like, probably one of the most impressive companies because of e-commerce, which is, they're getting a lot of profitability from, their cloud, but primarily e-commerce is still a huge driving factor in services for e-commerce. But you can see they're only growing at single digits too, right? Like this AI stuff that they're playing into is still in its infant stage and it hasn't justified revenues. So this kind of brings that circulating conversation back to the point, is this a bubble? And the question is variable, right? I mean, to put a status of yes or no is very, very hard because it depends on how fast this can actualize for businesses. So, I mean, but as far as you can tell today, these companies do not deserve to be trading at much of the value they're trading at. They're not growing enough revenue. They're just not hitting as much. NVIDIA is trading at 100 times multiple and has to get to the scale of Apple to justify its value today. So you're paying for that, and that's got to go beyond it to even start really justifying the investment unless it can just keep it up, which it won't. It can't. What NVIDIA is doing is truly unsustainable. Eventually someone comes for their lunch, or eventually you start hitting parity with these big companies willing to spend that kind of money on these things. It could just be a quick start where we just need these big, huge things to start with, and then we'll go from there and maybe pace it out. I don't know how much they're spending. So the question is you're kind of playing Russian roulette with it. The day it catches up with that and parity starts to equalize with its growth, and you start seeing those revenue numbers come down and the earnings numbers come down, again, NVIDIA will drop like it did in the past, but that's the cyclicality of NVIDIA, right? So I think it's just a fascinating conversation to be had across the board right now. And again, I would just be hyper cautious, right? Because I still feel that reminiscence of crypto, right? Like crypto has real utility. People all of a sudden don't think it does anymore. People have moved on, but trust me, crypto is still going to revolutionize a lot of smart contracts. It's going to start indexing its way into the video game world. It's going to come around. It's just, we thought it would be this huge thing, and then it still could potentially be, but it takes time. And when, imagination overtakes the reality of time, that's when you get into these bubbly scenarios and you want to just be a bit more cautious with it, right? But again, I'm taking a risk. By all means, this isn't something to not be buying into. It's just a matter of understanding that, when you're buying these individual stocks like Tesla, like I am, or Palantir, whatever, like you're taking on some pretty assumed risk, and you got to expect volatility and potential massive downside. I mean, there's always potential for a huge downside when companies aren't actualizing any of the income. I'm here for the sexy girls. There ain't no sexy girls here. Can NVIDIA go higher? Yes, absolutely, and it probably will. Their earnings are coming out at the end of February. Let's take a look, because I think NVIDIA's earnings date, was it the 19th? What day is it posting? Is that next week? Earnings date. Let me just take a quick peek here. Yeah, NVIDIA's going to be probably one of the most pivotal ones to watch. And sorry, it's on the 21st, so it's something to pay attention to for sure. TSM too risky now. Yeah, China. The problem with TSM, if China ever makes a move, TSM stock is gone. It'll be obliterated overnight. But I think that's priced into the stock to some extent, because TSM trades at it's actually trading at a pretty high value today, considering the lack of revenue growth to take into consideration. Thoughts on the low yield growth CAD dividend stocks such as ATD, SJ, and Dollarama? I haven't dug into things like Dollarama as much recently. They've proved to be like one of the most recessionary proof businesses out there, especially in this kind of higher inflated market. I mean, they're one of the few growers. They're already up 6% year to date, but they also trading at pretty high premiums for the growth rate. I have a hard time with these kind of companies that I'd rather just can maybe get most exposure to the indexes, or stick with the simple to understand ones like the banks. I mean, you could build a diversified portfolio of them for sure, but I just, it feels like they've just been getting so much attention because of the market environment, and I just don't know if I trust them as much as the ones that are beaten up, that nobody likes and comparable. What are you buying? I am not buying much this week because I ended up having to pay. Well, I pay everything in advance. So, I mean, I've been just kind of keeping my head down, paying all my bills. I had paid property taxes up front. I paid my insurance up front. Now that's doubled. Driving insurance, moving to the city and all that stuff. PayPal is garbage. Controversial opinion. I have a love-hate relationship with PayPal, because I stopped using them as much as I could when they started ripping me off, because they don't let me trade currencies anymore. They used to let you trade currencies. Now they don't let you trade currencies. And PayPal, they like to slip in, we're using AI or whatever. Like they're just such a dinosaur business that people seem to love. And there's, like I said, I get people think that it's cheap, but they can grow, but can they really grow? I don't know. I just feel like there's so much competition, and if PayPal didn't exist tomorrow, would our lives really be impacted any differently? No. These Apple Pay, all these companies are taking over. I mean, this is the problem. Like it's like Facebook paying a dividend, right? Like that shows you maturity in a company. I feel like they're starting to kind of get to maturity, right? Like they're growing in single digits. Revenue wise isn't anything crazy, just like most companies. And when the revolution comes back around, like they're trading at a favorable multiple for the stock today. I don't think it's like super cheap, but I think it's favorable. It's not like this stock can just come back like Meta did. They have to do something pretty profound to do that. And I think they're fighting to keep kind of user growth as it is. But yeah, I don't know. I just feel like they don't have a moat. I'd rather own something like Visa or MasterCard where I know like you're paying a premium, but they have a moat. Yeah, you could make 10 to 20% and sell it off if you're trying to trade it perhaps. But like I said, they're not going to be just doing anything like Meta did. They just don't have the opportunity, I think. I could be wrong. I mean, it could be a good stock. If you're buying individual stocks, you want companies that have moats and have like huge growth potential, because especially companies like this that don't pay dividends. And I just don't see it with PayPal. You could see it with like, these big tech companies like Google. Like Google can just keep making huge margin off ads. They own the ad game. They're a monopoly in it. And then they have all these growth vectors and they have cash to pay for it, right? Like Meta does. So, if you can get Google or Meta at good prices, I'd rather overpay for those companies than a company like this, where I know like the best is kind of behind it. And it's going to take a long time to ever recover to those all-time highs. So, I mean, it's just interesting, right? My recent revelation is that the entire TSX is a value trap unless you're looking for fixed income. I agree. I don't think the TSX has the capability to grow to any major latitude just because the big companies, very few of them are doing share buybacks. You look at Enbridge, dilution. Most big companies are diluting. And it's just not the best. Because it obviously takes away from that shareholder return, especially in a time where interest rates are high. But I think with some of those companies, you could get an initial bump on interest rate cuts and you could lock in 8% yields, which are unheard of right now. I mean, 8% yields never existed. I mean, you go back 5-10 years ago and you'd have laughed to get an 8% yield off one of the 5 largest companies in Canada, but now it's just normal. So if you want cash flow, if you're in retirement, it's great. Nothing wrong with it at all. I have PayPal for a couple of months, but can't wait to sell it off with 15 to 20%. I mean, you're gambling for sure. It depends on how you're swing trading it, but there's a lot of hype behind it. It could go up. It's a $63 billion company. You don't have people pumping it on YouTube. I mean, by all means, it could go up, but it is not, like I said, it's just not an exciting company. I don't understand why people, when they want to buy stocks to go up, like in my mind, I'm always trying to think of the long term as possible with most extent. It's just like there's companies you trade and swing trade and you hold for shorter periods, and you're playing this is probably a 1 to 3 year trade if I had to guess. It's like this kind of basket that it sits in, but I'm trying to get to a place where I can look at companies that I can hold for a longer period of time, where it's like, even if they drop, I don't have to worry or care as much, and I can just gamble on it over a 10 or 20 year period is the goal. So when I'm buying individual stocks, it's mostly like these large cap tech, and I've got some small cap speculating. I got crypto, but it's so insignificant compared to these larger investments because I'd rather just buy an index. It's just saving me the headache for the longest run. But at the same time, like you got to recognize that, some of these companies are going to do some profound things, and it's stupid not to own them individually. I think it's, at my level, it's not for everybody. I think most people should own indexes, but where I sit today, when I'm just looking at it and people think these tech companies are expensive, and they are, I just think they become rapidly cheap when you look at the margin expansion of what they're doing in the future. And if you believe that future is upon us in the next 10 or 20 years, I mean, why wouldn't you want to own it? I mean, you could still see way above average expected returns when that stuff starts to kick in a material way. It just hasn't kicked in a material way. So there's going to be some volatility here, right? So just stick to things that you can understand for longer term and be very cautious with things you can't, like NVIDIA for shorter term. NVIDIA is something you buy into and you take profit and you set stop losses. Stop losses are speculative and they might not work if the drop is that sufficient, but you got to just imagine that these things are unsustainable. There is no growth rate that NVIDIA at that scale is sustainable. So you just got to be super careful. You're going to buy chip ETFs? Nope. I get my exposure again through the S&P 500, right? And through a lot of these big companies. I mean, I just, I don't want direct exposure because again, it's too hard long-term for me. I don't know where the chip industry goes. It's changed so much in 5 years, changes every year. I mean, you go back a year ago and NVIDIA was crashing because crypto was dying. And everybody building miners was finally slowing down. And then everyone's like, it's a bubble, it's going to burst. And then out of nowhere, this AI thing starts up. I mean, I just don't know who's going to be playing it. And SMH, for example, is heavily weighted in NVIDIA. It's heavily weighted in the top few. So you mean you can't have NVIDIA crashing. You can't have Taiwan getting invaded. I like SCHD. I think SCHD has broad comment. I mean, I get exposure to these companies through these ETFs, right? So they can sort themselves out. I just don't want to have to mentally deal with it because I don't understand the industry. I don't understand Palantir software. I stick to what I understand, right? I understand Google. I work for Google. I get their platforms. I see how they're using like Gemini. I see how they're using AI and self-driving. I can see it. I can understand it. I can wrap my head around the margin expansion. Same with Tesla, right? Like Tesla's probably one of the easiest companies to understand if you sit down and you just look at all the auto companies, you look at Tesla, you look at all the extra stuff Tesla does, and you're like, okay, I get it. I get why it's expensive, right? It has to be expensive if you believe in that future. And if you don't, then, it's a bubble. And it can be very likely to burst here if people give up hope. And that could happen this year. I hope it does. I want to buy into these things because I think this future is underappreciated. What do you invest in your corporate account? Boring stuff. My corporate is for security. I look at my corporation as my future retirement in a way that people just don't appreciate from a tax advantage standpoint. I was joking with a guy today. He's like, can you get rich in Canada? He's like, what's it like compared to the States? Because he lived, I won't get into the details of where he lived or what we were discussing, but I just said, like, if you live in Canada and you can open a corporation and you can make money in the US, your corporate income tax rate is only going to be 13% on the first $500,000. Not only that, you don't have to pay any tax on anything you write off. You can write off 1/6 of your housing expenses. Well, for me, specifically 1/6, because I use one of the 6 rooms that we have here. So I can write off anything that I use this one fucking room for, or I can write so much stuff off, travel expenses. Oh my God. So I'm just using like my corporation as a loophole for social media, right? It's like that gray area. It's like, well, if I go on a cruise, but I do work while I'm on the cruise and I meet people and I try and do business there, all of a sudden it's a business expense. I mean, it's the same with a lot of things. You go for dinner, right? And you're talking business and you can do some business stuff while you're having dinner. It's a write-off. There's so many things you can just save yourself such margin on. And my laptop, I mean, think of it this way, like I spent like $4 or $5 grand on my MacBook. And if I were to use my own personal income, I would have had to pay like $7,000 because I would have lost a couple grand to taxes. Because once you get into that 30% bracket, like, oh my God, like it's crazy. So you can just make money in a corporation and buy stuff and you pay taxes later. Whereas when you work for somebody, you make money, you pay taxes, then you get paid, right? Like you just have to pay the taxes immediately. Whereas corporations are backwards. You pay taxes after you've spent the money. It's a beautiful, wonderful system if you learn and you get a good accountant. My accountant is awesome. H&R Block, surprisingly, you think it'd be a pretty generic place, but the accountant I talked to there is wonderful. So yeah, I highly recommend that you get a corporate account and you invest in it. And you got to be careful because you pay 50% passive income tax on investments. So you buy mostly growth stocks, so you can withheld any of the dividend crap, so you don't have to worry about it. And then sometime down the road, you simply sell it and you pay yourself out, because if you pay out a capital gain or a dividend that is passive in a corporation, it completely waives any tax you have to pay on it. So you wait till you're in a lower income tax bracket and you start paying yourself that as, part of your retirement. And then you get some extra safety because you can't take that personally. It's a separate entity. So if I get sued, you can't go after it. If my wife, heaven forbid, divorces me, she can't really go after that. Not in a bad way, but even if I pass away, it's easier to gift her my shares in the company, set the company up so it's passively generating dividends, say collect the dividends and pay tax on it and use it in perpetuity for the rest of your life. That was a long-winded answer for a very simple question. So I just use it as I got to do a whole course on it. I don't think people appreciate the complexity and the loopholes and the insanity. Why don't you pay? I do pay my fair share, right? I have a full-time salaried position. I understand this because I pay tax on both sides. I'm not like ripping the government off. I literally have a salaried position and I know what I'm getting taxed because I see it off every paycheck. But then I also work for myself and I make a very good income off my self-employment income. Combine those two together, make a 6-figure income for me. So I get to see both sides of it, right? Like I couldn't even, it's so hard to buy a house without having income. Like if you just put all your money in a corporation, pay yourself as little as possible. Good luck buying a house. Good luck doing anything at scale, because you'll never get, like the bank can't consider corporate income as personal income. You can't use it to leverage property unless you're buying property with the corporate income. So you got to be very careful about like what you're doing and how you're doing it. But I'm telling you, it's a system that is kind of jaw dropping when you learn how to take advantage of both sides. As I have. I'm not sexy enough for OnlyFans. You could be. It's a good place to start a side hustle, man. Mowing lawns, 100%. You can mow lawns, anything. I honestly, like, you want to get rich in life. It's not about being smart. It's just about working harder. I mean, work harder, spend less. It's as simple as that. You could easily work 2 or 3 jobs today. There's no excuse for it. You're a truck driver. Well, now you work for a call center too. pick up the call center thing. AI is generating so much possibility for you to do extra crap for no reason. I mean, you could learn these tools and be affiliate marketing, make a few TikToks at night, for Christ's sake. Pick up your phone, damn it. Go order something you like on Amazon you're going to buy anyways, review it, post it, and put an affiliate link. I mean, there's so many ways to make side hustle income and start a business. And once you make enough money, you can learn the loopholes, and not loopholes. Loopholes is a bad term. It's just the system that is in place that when you understand how to utilize it, you can save yourself a sufficient amount of money. And you get a lot of advantages from liability and, lawsuits and marriages and God knows what. It's just a safety mechanism, in my opinion. But housing building, this conversation has gone sideways. House building, if you can't front it on top, end up get rewarded on the back end. Laugh out loud. Yeah, I honestly, have this debate with a few people about, with all the, like I said, I have these broad conversations because of like all these businesses that I'm working with. But I think people generally just, if you want real wealth, like you don't have to go to school and pray to God you get a 6-figure job. You just got to come out. Like I know a guy that's retired right now who's making like crazy money just cleaning windows in his retirement privately. There's just so much stupid stuff you can do that just makes crazy money, and people are just too lazy to want to do it. I think to some extent. I shouldn't be beating up too many people. I know there's a lot of hardworking people. It's just, making money isn't sexy. Investing is sexy. Investing is fun. But imagine that you get 2 incomes and then you start investing on the side. You can make a 10 or 20% return in the markets on top of the income you're making, and you quickly become a millionaire. It happens surprisingly quick. You may not be sexy, but what do your feet look like? What do your feet look like? That's awesome. I do auto body full time and paint shit for people on the side all the time. Good for you, brother. That's what I want to hear, man. Like I said, it's funny at how people just like, they act like they want to be rich. They just don't understand how easy it is. It's not hard to get rich. It's just people don't want to do it because they're lazy. They want what they want today, and they can't delay the gratification and put in extra time. I'm only appreciative that my fiance like puts up with my work hours. Because like it's not like overly bearing, but I mean it's a lot for sure. This YouTube stuff is just for fun, basically at this point. Name me 1 or 2 stocks to buy my RSP. Which would you do? It's personal to you, man. It's perfectly personal to you. Some people want growth in there. You probably be better off if you're younger for growth, but I like it for dividends. I buy my U.S. dividend stocks in there because it keeps it so I don't pay withholding tax. Again, tax loophole. Avoid the 15% withholding tax. Buy your U.S. dividend stocks in your RSP. Microsoft, Google Class C. You could do that as well. Google's an awesome company. Buy some indexes. I prefer you buy indexes. Most of my money's indexes. Let's keep that in mind. Always try and remind you that most of my money here going forward will be in index funds. So don't kill yourself. Damn, I'm late to the stream. We're only just getting into the weird stuff now, baby. We're only just getting into the crazy tax advantages, the world of corporate income, the world that is favorable to the knowledgeable in Canada. Unlike in the States where you have to kind of get out of California and go to a different state where you get better tax advantages, Canada gives some pretty good ones. It's one of the most expensive places to live right now, but it is definitely one of the easiest places to get rich, I think. But I'll leave it at that, and I'll pass the question off to you guys. In the realm of AI, if you want to get a side hustle today, I highly recommend going to one of these editing platforms. Look at an industry that is about to get honestly disrupted 9 ways to hell, and it's happening right now. It's happening to editing. It's happening to people that are having to do my job. You can hire Synthesia now, and you got to learn to leverage those tools because they have higher margin and they offer better efficiency to businesses. Take those tools, market them to those businesses. I mean, if I can give you a good example right now, let me tell you I think I'm trying to remember the one. This one has the best affiliate program. I just got to find it in the messagiatos here. Let me just take a look. I think it's called, I really don't want to jump off until I've shown you guys this one because it's super awesome. I think it's called Pictoria. You guys ever heard of this one? Pictoria. I mean, this is the easiest way to make money right now, in my opinion. If I wasn't as busy as I was and I had to start tomorrow, because I understand how TikTok works, because I understand where I can get the most views at the cheapest value, I'm going to go to this website called Pictoria, and I'm going to scroll all the way down to the bottom here, and I'm going to hit the affiliate partner, because Pictoria is breaking down videos and helping people edit in a way that is unimaginable. You can go learn about them. You're going to take a look at their affiliate program because they're going to offer you, for the sake of just selling their product, and automatically you'll get 20% on every subscription in perpetuity of the client. And anybody that comes under that client, you're also going to get, a 10% sub-affiliate program in perpetuity of the client. This is completely making it replaceable to have editing software. I don't need to spend $400 on Final Cut anymore. I can just use Pictoria, which is going to allow me to use like everything that matters for editing. And this thing does all editing. You can use ChatGPT to write a script. You can put it in here. It'll edit a video for you. It'll add all the overlays. You can input, output stuff with a click of a button. It's beautiful. I would go learn this stuff now. This is the stuff that is going to ruin your kid's career. This is the stuff people are sitting in school right now learning how to edit and using how Final Cut works and 3D Elements and all these beautiful editing tools, and they're going to be gone. They're going to be largely unvaluable in the next year because of this. If you can invest in these businesses, if you have friends starting these businesses, for God's sakes, go work with them. Learn to get a side hustle and learn what's on the forefront of change in major industries and just slightly be ahead. You're ahead today because you're watching this. You could literally go on TikTok, make a video about this, put your affiliate link in and get 20% on the residual returns of somebody that's likely going to use this if they are in video creation for a very long time. Super easy business model, folks. Let's all get rich because this is how it happens. I love this stuff. Buy my course. I don't have a course for this stuff. That's what I got to start saying. I'd be like me, Kevin. Buy my course, damn it. Too much value in these videos. And then invest it in the S&P 500 or VFE, either or. Preferably if you're buying it in RSP, VOO. Because VFE, even in an RSP, I still think you get the withholding tax because it's automated through the ETF. Stay cool. Stay awesome, folks. I'll catch you in the next one.